how does a EPF earn its dividends? Well, actually, it's quite transparent. You can go and download this annual report. It will tell you roughly this from the top of my head. Based on last year's annual report, about half of EPF's money is actually in fixed income. Fixed income is a nicer word for bonds, a nicer word for lending a company money that pays interest. Okay, so that yields them a fixed yield. That means every month they get paid or every quarter they get paid. Okay, that's a fixed income instrument. Now the other half of that, I understand, actually sits in equities or stock market, right? And more than half of that half is actually overseas markets. They invest in US companies. In Malaysia, they also invest in Bursa Malaysia as well, because need to support local economy, right? These companies that they buy, I don't know the specific stocks, or I can't tell you the whole universe of stocks, only they have privy to that information. But sometimes if you look at the top 30 shareholders of companies listed in Malaysia, they'll tell you that it's owned by EPF, for example. Sometimes those companies that they purchase also pay them dividends as well. So they get income from their fixed income or money market, they also get income from dividends as well. Now, another way that they generate returns is also through capital gains, right? So if the shares that they buy go up higher and they sell and take a profit, that profit belongs to them as well. Now, of course, EPF does not invest all that money all internally by themselves. They do outsource it to certain fund managers to actually manage it as well locally, and I believe also abroad as well, because they are managing over ringgit 1 trillion in assets, so it's a very, very sizable amount. Yeah. So for you to replicate EPF, if let's say you're an individual, I think it's going to be a bit challenging because number one, getting access to fixed income instruments, you can't buy them directly. You can only go through a mutual fund, for example, that does fixed income. You can, however, participate in equities directly yourself, but you have to understand, because they're managing $1 trillion, so their range of assets that they invest in are quite wide range, and it's actually unrealistic to try and compare. Say you're investing $100,000 or $1 million, for example, versus $1 trillion. The mechanics of that is actually very difficult. The best way to do it is actually educate yourself, invest in yourself, and either look for funds that you can invest in that you believe have some potential upside, or you participate directly in equity yourself and buy those shares and create a portfolio yourself. But not realistic to replicate EPF versus $100,000 or $1 million portfolio.